The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
And the stock of the day is Superloop. Shares are rocketing higher on a profit upgrade. It now estimates that underlying earnings will come in at $91 million, up from $54.3 million a year ago. Superloop is pointing to ongoing strong trading performance as being behind the 67% increase expected on FY24. CapEx remains on track for between $28 and $30 million as a PS. So let's talk about the stock of the day with my guests in studio, Francesco Stradis from Ord Minnett and Andrew Coleman from Tip Group. Francesco, Superloop, little telco, big ambitions, and it seems to be executing.
Yeah, you start off a low base, and obviously when you start, hitting home runs, then the growth is quite substantial. So they've achieved market share gains. Management's discipline has been very good. Particularly on the cost restraint side of things, rather than cost cutting. I think they've been very restrained in their approach to costs. It does trade on a fairly high multiple, but it is a small cap and it's growing at a reasonable rate. But I think, and as you can see from that intraday chart that was up before, the market obviously pushed it a lot higher, but softened a bit because I think there's a fair bit of that growth built into the share price. It's not one we cover, so I'm not going to give a recommendation on it. But in the small cap space, Aussie Broadband's probably our preferred at the moment, and obviously in the large cap, Telstra's been doing extremely well. Share price performance there has been quite strong as well. I'm not sure where the market growth is coming from. I think they're achieving, and when I say they, I mean Superloop are achieving some gains off some competitors at the moment.
Yes, it did win a Origin contract, which helped it along. So what is your view on Superloop?
This is a company that if they make a profit this year, it will be the first time in 10 years. So I'm congratulations to management for finally doing that, but a 10-year track record of managing to connect shareholders to capital raisings rather than profit doesn't enthuse me. Overall, I think the space they're in general is a very competitive space, and it's one where the moats, the competitive advantages will be very limited. Selling effectively broadband and connected services is not a new thing where there are large moats and there's limited competitors. So, it's currently on a PE of 271 times earnings. If you take last year's numbers, if you take this year's forecast, I just did a quick calculation, it's still on about 40 times earnings. I think this is one where the market has run well ahead of itself on a story of growth that may be delivered in future, rather than perhaps looking at the track record of success that's been delivered. So it would be a sell from me at these prices.
So we've got a sell and we've got a preferred pick for ABB in the small cap space, or Telstra in the big cap space when it comes to these telcos. Stay with us.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.